This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Welcome back to the TF Metals Report podcast highlights for the last week of April 2022. A week that began with a continued drubbing in COMEX silver, 5 days in a row to the downside. That streak was going to continue as we went through the week, moving through option expiration on the COMEX, contract expiration on the COMEX. You always get pressure as positions are legged out for maximum manipulative impact. And again, that continued all the way through the week. So that's one place, things we discussed back on Monday the 25th. And please take a look at this chart and you'll see where things were headed as silver broke down through its 200-day moving average. Silver too. Now look at this. 5 days in a row, like I said, just getting smashed, crushed, down $3, more than 10%. Now, this isn't the first time this happens. Third time it's happened in 6 months. Okay, look at the washout back there in late November. How many red candles is that in a row? That was painful. Then again in late January. Well, let's see what's going on here. That's late November ahead of the December expirations. Late January ahead of the February gold going off. And they smashed February gold and took silver with it. And now here we are, late April, ahead of the May contract. Below the 200-day, that's important. Let's watch for silver to come up. Like I said, rally with everything else. Try to get back above this 200-day. Fail. Freak everybody out by falling down closer to 23 in this trend line. Notice the RSI is already 37. Maybe it comes back down again to it'll go up tomorrow and then come back down to 38 or 39. And then that's your low. That's where I want to buy the rest of my physical. Okay, that's where I'll probably be looking to buy some calls as well. Maybe I won't ever get a chance. Maybe we'll get back above the 200-day and above 24 and just start moving higher again. But I suspect this could be a volatile, difficult week. And I think I'm going to get a shot to look at it at least at 23.50 again, if not closer to 23. And then that'll be my trading and stacking opportunity ahead of the FOMC. If you're a regular listener to these weekly podcast summaries, you know we're keeping a close eye on the stock market. The analogous period is the fourth quarter of 2018 as the stock market ultimately fell 20%. This led to a Powell pivot, and instead of tightening, the Fed moved to loosening, officially putting that into policy in June of 2019. What happened in late 2018 is the stock market broke down, and once it broke down through support at 2,600, and currently that support level is around 4,100. But once it took out 2,600, it rapidly fell 10%, but gold responded and went the other direction. Again, that's analogous to where we are now. We'll keep an eye on the stock market, and it's one of the things we discussed Tuesday, April 26th. I think I showed you this chart yesterday, but I can't remember. I know I included it in my Sprott Money post. This is October. This is the fourth quarter of 2018. Gold is in candlesticks. S&P is the blue line. The S&P had come down, remember, in October, then went sideways, and then finally broke about 2,600 and plunged into the Powell pivot. Well, notice how gold kind of rallied and went sideways, but then as soon as the stock market plunged, gold soared. Two reasons: safe haven bid and anticipation of the Powell pivot. Gold eventually went up, as it did here, kind of went sideways through the first half of 19 and then took off once the Fed started cutting, okay? So the most important point, though, here is, because it's not perfectly analogous to today, is once the S&P broke down, in this case, breaks down through 4,100, it'll accelerate downward like it did in the fourth quarter of 18. And once that happened in 18, gold took off. One of the things that has been plaguing the precious metals markets, and really all markets, this has global impact, is the massive surge in the US dollar. In fact, moving toward 20-year highs on the dollar index, highest level since December of 2002. Probably starting to run out of gas as it's going parabolic. If it does begin to pull back, that's going to turn into a tailwind for the precious metals. So that's one of the things we discussed Wednesday, April 27th. The dollar on the monthly chart. So I was just telling you about. got up here into this 103.5 area in February and early March, early March 2020. And then way back here in January of 2017, an intraday high of 103.82. And you get above there, you can look all the way back here to December of 2002 before you find a higher dollar index value. Now, previously getting up to this area, you can see how sharply it fell back, right? And in other big rallies like this, you can see how sharply it's fallen back. And eventually that's going to happen again, and that's going to be very beneficial for us. Look at when it came down in 2003 to 2008. Okay? Remember we all talk about gold going from $300 to $1,000 between 2003 and 2008 as the dollar index fell from 116 down to 72? So when the dollar falls again, and it will, it's going to be a good time. Our Thursday conversation this week is always a free podcast. You don't need to be a member of TFMR to listen. We always put those out on Twitter. You can just stop by the site and listen. This week's guest was Australian economist John Adams. John, a strong defender of sound money, but also a big opponent of all the fractional reserve digital derivative schemes around the world in precious metals. Stop by TFMR. The link's right on the homepage. I think you'll want to give it a listen. And on Friday, April the 29th, we look to wrap up the week and the month of April with much of the same garbage we've had to deal with now for the last 2 weeks. Everything was looking up, trading solidly through the London session on physical demand, but as soon as we turn to the paper derivative-based COMEX, down goes price, gold falling a full 1% from its highs. Silver falling 2.5% in 4 hours as soon as the COMEX opened. The chart you see in front of you as we finish the week is a plot of COMEX silver as a blue line and the GDX, the large gold miner ETF in candlesticks. And you can see how closely correlated they are. It's not just the last month that you see in front of you. Plot it yourself. You'll see it goes back 6 months, 6 years, and even longer. Now, why would silver correlate with a basket of gold miners? Well, once you get the machine set up and in charge, it allows you to control mining shares by simply controlling silver. And then you let the machines, the HFT high frequency trading algorithm machines, do all the heavy lifting for you. Keep the sector depressed, keep people out of it, keep prices in check. And that's how we roll in this fractional reserve and digital derivative pricing scheme. There's money to be made, though, across the commodity sector. There's good reason to time your purchases of physical metal. That's all part of what we talk about at TF Metals Report. Please check out a subscription. I think you'll like it. It's just $15 a month. We'll be back next week to cover the FOMC meeting and the latest job report in the U.S. It's going to be a very busy week as we start the month of May. Have a great weekend, everyone, and thanks for listening.